Thank you both. Now on to our final panel for the day. Last but not least, of course, to lead us through the topic of investing in the future of finance, we have Vladimir Pavlović of WM Equity Partners. Where is Vladimir? Yes, there he is. Aside from working with institutions and holding various other positions related to investments, he also worked heavily with providing startups with access to capital. Vladimir, please go ahead and introduce yourself and your participants.
Okay, thank you all for staying here with us until the last panel. The last panel is always the challenge regarding the number of participants, but it also has some advantages, like instead of being here just for half an hour, we can stay hour and a half. So there is no one else ahead of us. So thank you. We will try to be on time. The topic of the access to finance, fundraising, and everything else is a very interesting topic. We heard about that in almost all panels that we now discussing, but we will try to discover new angles of this topic, and I'm very glad that I have my panelists here today, Luka, Alex, and Miloš, and let's start with presenting of themselves and institution where they're coming from. Luka, you can start.
Thank you, Vlado. My name is Luka Pejović. I'm head of finance at Relio AG, a financial institution based in Switzerland, in Zurich. And although I am myself based here in Belgrade, yeah, so much.
Thank you, Luka.
Hello, everyone. I'm Alexander Chatterjee. I'm the CEO of two companies, one in consulting for machine learning and financial technology, and the other one, a small VC based in Zagreb, but I live in Switzerland, in Zurich. So.
Hi, from my side as well. Miloš Matić, I'm a founding partner of Omorika Ventures, the early stage VC fund based out in Belgrade, Serbia. We invest in technology startups founded by Serbian founders and located in Serbia as well. And I want to personally thank you that you stayed until the last panel and being the most enduring ones to hear us out. And I hope you're going to find some value in our discussion.
Okay, thank you all. Just to give you all the brief intro, we are going to discuss about some global trends in financing the VCs and startup, put some light on our region, also try to speak from different perspectives of the startups and investors to see which, let's say, financial instruments are most appropriate for fintech startups during our panel. So also while we are speaking, all of you are strongly encouraged to give the questions to the panelists and to me and to have rather open discussion rather than a lecture from the side of the panelists. So I will start with Miloš, asking Miloš to let's say, comment the global trends in financing the fundraising of the VC funds, startups, and to tell us why is he so optimistic about the fundraising of Omorika Ventures and the final closing of this domestic VC.
Okay. Well, let's start with this because I dug up some of the bunch of information, bunch of data points we can have in front of us. But there are three main ones I wanna point out: the global trends, how they affect the venture capital asset class. But first, I want to just set a scene how it was with the VCs since 2010. 2010 until the pandemic, so roughly around 2020, it's a golden decade of VC. Lower interest rates, accessible capital, that means a lot of money went into VCs that pumped the valuations of the company, and then you have Uber, you have Airbnb, we have the startups that actually are born after the financial crisis of 2008, 2009. That has rapidly changed since 2021. Just to grasp what has been changed, interest rate hike that affected the cost of capital, and VCs usually as the highest risk asset class didn't receive much attention. it didn't receive the capital that usually had in the previous decade. So roughly around, and this is the report I found concluding the Q1 of this year, the global VC funding dropped by 40% since 2021 to 2024 and to 24. So that's a huge drop. There's less VC money available, fresh money coming into the system, meaning less startups get funded, meaning less unicorns, less companies generated after that flow. But again, when you see the number of funds founded in the last year has reached the levels of 10-year low period. So emerging managers are hard to fundraise. So that's why I find a great satisfaction that we were actually able to raise the Omorika last year. But you see the shift of where the money is flowing. So the most of the VC capital goes into the top tier VCs, mostly based in the US. But generally, Europe is not that famous about investing in this risky asset class. The second thing is, because there's the lack of capital going into the VCs, into venture capital, VCs themselves, including us, actually shift the strategy that are more, when they're looking in the startup, to assess the startup, they're looking more for profitability rather than scalability, which is completely the opposite of what was happening in a golden decade. Now the unit economics play a great role in assessing if the company is good investment or not. And when you look at the report, and I think it's roughly around $370 billion went into VC, invested through VC funds in the last year. You see less deals happening, but the rounds the startups raise are enormous. So we're talking about billions now of rounds. And that draws a third conclusion. When you see where the money flows, you see it goes into AI startups. AI drove roughly around 48% of all the capital invested globally. So 48%, almost half of every dollar invested went into AI, which is crazy. Fintechs, crypto, whatever we discussed today, are seeing slight drop in funding. But even a greater data point, and I'm gonna slowly close it in because I don't want to take too much time. Out of all the funded AI startups, 20 companies received 80% of the capital raised. And I'm speaking here about OpenAI, who produced ChatGPT, that raised almost $63 billion within a couple of years. So see that they're betting on single startups, their infrastructure startups, someone who has a great moat in defending their business model and defending their value on the market. But again, it's associated with the AI. And when you see all the trends that I pointed out to, I see the VCs becoming more conservative. They're looking to write bigger checks in a startup, making their portfolio a little bit smaller. But again, focusing on the value provided to the portfolio rather than just having hundreds of investments in their portfolio. I have much more data to share with you, but I think I'm going to stop here.
Can I jump on this, or?
Yes, you can jump.
Wonderful.
Yeah, because it's a conversation, right?
Oh yeah.
I really like what you're saying, because on our side we saw that between 2021 and 2022, startups became more humble. Before that, when we were filtering startups and we had 1,600 people applying to us, and we we did 320 pitches. We had a good 20% of people coming to us with BS projects. No, I'll say it as I am. I'm quite valuation that are off the grid, age non-appropriate part. I'm a CFO, I'm a CTO. Oh, great, you treat people, you're CTO and CFO at 21 after doing a university, that's great. What's the valuation behind it? And then 8 months later, they came and they were begging for us to give, like, I don't know, 1/3 of the money because they were dying. They were doing too much marketing. So today, after those 10 years of glory where you had like interest rates low, helicopter money everywhere and so forth, now it's time to do the real due diligence for VCs and not just like putting the money everywhere. But the problem is, you talked about AI, everybody's always following a hype. Maybe it's not so interesting to follow a hype, but more do the real proper due diligence, the operational due diligence with a company, and then invest in the people.
I completely agree. When we talk about AI, it is a surge in a focus of many of us, but it gets used every day. And now the AI, I mean, with the AI, you cannot do anything core valued as OpenAI, Anthropic, and whatever. The new layers of everything that's been built, again, the new technology hype may come from data gathering, data labeling, and getting the data sets prepared for the AI models to actually run in the future. So I see a lot of their potential in technical due diligence, especially.
Okay, we now heard the perspective of the VC, and now I'm just going to ask the Luka. Following thing, the dream of each traditional corporate CFO is to become the CFO of the startup. So does this role has the maybe different side of the medal, and what can you describe us the process from the perspective of the startup? How do you attract investors? What is your experience in the last year? What was before that?
So I was never corporate CFO, so I cannot confirm what you just said. However, yeah, I can answer the second part of your question. Definitely, well, fundraising as a financial institution in Switzerland used to be much easier. At least that's what I hear from my colleagues. I joined 2 years ago, so I cannot tell you that much about the period before that. However, the quality still is in demand, and as Miloš already put it with raw data, it's now everybody's much more diligent. It's not just giving money to anybody who has something that resembles a good idea. And since we have invested, well, now 6 years in developing Relio, we are not anymore on this level, selling the idea, pitch decks, and whatnot. We already have a lot of some traction that can be used to convince somebody. And if you have that, you're in a much better position than anybody who's just starting now. So that's definitely something that made my life, our lives, easier. Having said that, we do feel that people are getting more conservative. The funds, they want to see something which was already mentioned, much more unit economics, much less great ideas. So far, we have managed very well because we think we do have good unit economics. But it's become definitely a different game, both in terms of global trends and us as a specific company.
Okay, thank you, Luka. Maybe I would just revert to you on one next question, then I'm going to follow on with Alex and Miloš. When you, let's say for your last round financing and maybe previous one, what was the structure of the investors? Corporate investors, VC, high net worth individuals? What type of investors are, let's say, attracted by the Relio?
I'll talk about the last 2 rounds and the one that is ongoing currently. In the last 2 rounds, we had 4 VCs that invested twice in us. Those are VC funds. However, 2 of them are actually corporate VCs. So it's a mixture. We did not get an investment from a corporation, but they do have this venture capital arm that invests for them. So it is a venture capital fund, but it's not what you imagine when you talk about VC funds. It's a bit different. This current round is a completely different story for several reasons. We now have some also VC funds, but we also have individuals who are willing to invest in us, which was something we used to avoid previously because it's always nice to have VC fund. However, due to different specifics of our development over the last few years, we are now talking to some high net worth individuals who want to invest in us much more than previously. It also has to do with our business model because we are specialized in providing, well, basically banking services, although we're not a bank yet. We provide similar services to complex customers, and high net worth individuals are often very familiar with complex business structures and whatnot, and they recognize the value that we provide, which is sometimes when you talk to a corporate VC, for them life is simple. You get the bank, you're a corporation, you knock on the door at any bank, and they are more than happy to have you. But people who are like, maybe we talked about, we heard a lot about crypto entrepreneurs today. They can have a lot of money, but they will always, as soon as they mention crypto or blockchain or whatever, red flag at the bank, and they know the pain. So, somebody at the panel today about talking about crypto offerings, they mentioned in their prospect, they never mention crypto, blockchain, coins, whatever, and for good reason, because, that's what causes problem for you as a potential banking customer. And these people, they know what we do and they recognize the value. So for that specific reason, we have a lot of them who are very interested in investing in us.
Thank you, Luka. The question for Alex and Miloš. What is, let's say, the preferable financial instrument when you're investing in startups, maybe especially fintechs? Is it a token? Is it a convertible note? Is it equity? What is your preference?
Okay, so not to spend 20 minutes on that. No convertible notes for me, because it's always very complicated to make the legal structure behind it. And basically what we do is smart money, so we coach the person, but we don't just put cash, we also coach the person in order to go to the next step. So it's going to be a Series A or Series B, and we educate them. So it's a lot of time there. So if we go with convertible notes, it's pretty much like a debt in a certain way, and you're losing the gain on that. So definitely equity swap, but I would prefer tokenization, because equity costs money. You need to have a lawyer, you need to have contracts, so forth. Tokenization, you can even add additional things on the smart contract that would be much better. Me, for example, the first time we invested, we did it completely wrong. That was we invested a small ticket, but everything on the paper was great, everything on the product was great, but the founder was completely crazy and still is crazy. But if we had a smart contract, we would have been able to provide a goutte-à-goutte, so cash, digital cash, little by little, according to the smart contract. And I would love to see that in the future, because it will be much easier, cheaper, and you don't need to be a professional at law or to have a lawyer to do that. So definitely that's the future for me. But for the moment, it's equity swap all the way.
Thank you, Miloš.
Yeah, I have a different opinion on that. Again, I think I would love to see the tokens, as you said, described, patent pending, I guess. But the thing is, I love convertible notes for early stage deals. Why? It's very simple. When you talk about with technology company, when you talk about the founders, early stage, when I say early stage, I mean pre-seed and seed. What I mean by pre-seed and seed, I mean prototype, barely any revenue, and a promise. I swear I'm going to do it. So if you had that situation, it's hard to put the number and value the company. Valuations are just wishful thinking at that point. So convertible note actually jumps over that hurdle, and you don't have that hard negotiations about valuation, but you jump into the contract itself that has like four main things, key things to actually put down on paper, and then see where the startup goes. And anything past Series A, anything older companies, just direct equity is the way to go.
Okay, I completely agree with you. I was talking about startups more on the start to Series A, not on the pre-seed and seed, but yeah.
Okay, we have now less than 10 minutes left. Do we have some questions from the audience? I think it can be interesting to hear your questions. Please.
Brace yourselves.
Am I on?
Not yet.
Oh, soon. Oh, there we go. Thank you. I've been listening, nice conversation. It's just comments. I don't have a particular question, but by being a member of the Swedish Fintech Association and by listening to similar investor talks on their conferences, they are sort of more prepared for upcoming scenario where investment environment will also go Uber, meaning that startups will not come to you directly and ask, oh, we need equity investment or tokenization investment or whatever. It's more and more getting on the platforms for crowd investments, and even for European companies, we now learn a lot from the Emirates, from Saudi Arabia, and they are much more into it. I mean, you can't compare one Saudi investor with the average European investor. There's just a totally different approach, but they're not having issues being a part of a crowd and investing to crowd invested platforms, while European investors are more like, no, I want a VIP door to enter. So that's how I see it. I hope you agree. I don't know how you feel within your environments, but I see that, for example, somebody has mentioned in Sweden, since the introduction of DeepSeek, investments in AI decreasing. I mean, right the day after. So it's a sort of more dynamic environment becoming as everything else within fintech.
Okay, thank you for a comment. Do you have someone to reflect on this? Yes, please, Alex.
I got a broad comment on that. I think that crowdfunding is super interesting. Like Miloš, I did a little bit of my homework, and you know that in Europe we have 32 trillion euros sleeping in banks. So maybe rather than sleeping in bank, it can be used in India, and it's a cultural thing. That's the interesting. Guess how much money is sleeping in the bank? 2 trillions. We're talking about 1.5 billion people. 2 trillions. Here in Europe, 30 trillions. And that's also a little bit a cultural thing. You're talking about Saudi Arabia or yes, but maybe the quality is not as good there. And when you're going for VC, a proper VC, you have a possibility also to have an education of preparing your company to go to a bank. In an earlier panel, they were stating, well, what am I going to do? I got 50 people per day asking to have a 30-minute call with us, and I don't have time for that. So maybe people that are inside of a VC or in a smart VC kind of place, they can start to filter that and present teach them other things. So crowdfunding, 100% no. 100% VC as it is, also no. We should model something and go somewhere else.
Yeah, you're right. It's not just crowdfunding and crowd lending, especially crowd lending. But I discussed earlier on my panel with Dennis earlier today, things like reverse factoring. That's the thing that activates the money that sleeps at the banks in the right way. So I think the financial organization that provides the recipe for that sleeping money activation would be definitely the leader of the new fintech revolution, I guess. That's what we are waiting for. We see that is happening, but it is not becoming a standard, so to say. It's just a simple unicorns here and there.
May I jump on this real quick? If we're talking about crowd lending, crowd investing, or crowdfunding, whatever shape or form, being democratized, the premise of that is actually having a high level of general population having a high level of financial literacy, which it's even here and across Europe is not on a level it's supposed to be. We're barely now speaking about investing in the S&P 500, and we need to speak about more diligent and more detailed investing. So I don't see that spreading out that quickly. It's a good add-on. But I think having that as, I don't see that as an equal partner to VC at all. And I'm defending my industry right now saying that the VCs are not pure money allocators. Our job is not to just decide, okay, this startup goes and this doesn't go. We're actually working with the startups on building their business. So it's not just a matter of how much money you're going to raise. It's an important question. But what other value are you bringing to the table? Yeah. So crowd investing, crowd lending, the crowd cannot bring you the value that VCs can, or angel investors, or private equity funds, who are professionals in their job. So lead with VC, maybe crowd, whatever is a great add-on. But again, I don't see that happening anytime soon due to the low level of financial literacy. And lastly, to just fill out the question, here in Serbia, it sits like 39 billion euros in the bank accounts. 16.5 are private capital just sitting in the bank, not doing anything, not even invested in S&P 500. It's cultural.
Yeah. I agree. Sorry for taking too much time. Maybe there are other questions. I agree with what you just said, Miloš. This thing with literacy, that goes really fast. We've seen this in Sweden because we were there from start. We've seen this in other countries as well. Once some people start investing online, others follow directly. So one of our clients has over 45,000 registered investors in Sweden. The company that launched our solution last year in Saudi Arabia is already up to 17,000. So it goes really quick. And now those investors are asking us, is there anything in Europe we can invest in? Or, they're looking for more because they feel safe, they feel secure. They know that the provider of that platform is responsible in a way that they need to be compliant, secure, and so on. And they're risk analyzing all the loans that are provided. So they feel, whoa, why should I keep my money in the bank? So that's one of the recipes for this activation.
Yes, great discussion. Do we have other questions? If not, I have another question for Luka, maybe from the perspective of the startup, especially now we are emphasizing the fintech, and fintech, contrary to other startups, is additionally regulated by some regulators. And based from that perspective, which kind of investors Luka Relio prefers? These small investors, bigger institutional, what are the better partners for the fintech?
Yeah, if you're a regulated business, you need patient investors because it's not a matter of, are they big, small retail investors, VCs, whatever. They just need to understand that if you are regulated, you need to spend a lot of time and money to build infrastructure just to be able to participate. Relio took a lot of time to just be able to get the license. You know, this is something everybody who works in banking or has something to do with banking knows that it's a lot of things that seem not to make sense in banking and financial services are actually coming from the regulations. You know, somebody thought about something that is, you know, risk, and then they introduced the regulation. And this is something that you need to be prepared for, and your investors need to understand that it's not an agile startup, very sexy, that can move quickly, do things, you know, pivot from one day to another. No, you are a startup for sure, small team, but still, you know, you need to fulfill requirements that are very strict, and there's no, you know, much room to do some funny stuff. And that is something that makes my or our lives difficult. Therefore, we need very patient investors who know our industry.
Okay. Thank you, Luka. Thank you, Alex and Miloš. Our discussion almost brought sunny weather outside. So thank you all for staying with us, and we are now concluding this panel.
Thank you.
Thank you, folks. Real quick, so you're free to sit down and just enjoy the end of the conference. Before we continue, before we conclude, I'm just going to give you a couple of notes I took along the way. We have some food for thought that, you know, how come smaller markets achieve such success even though they are smaller, let's say less developed than the European ones that, you know, where we come from. There was also conversation on open banking, that it's not a boogeyman, but it's going to require some cultural shift along the way. Serbia joins SEPA. Congratulations. Welcome to the family of these other countries. Firm deadlines in Montenegro, even incomplete solutions, it made sense to have incomplete solutions on a tight deadline that came from above. Banks in Serbia, they have an advantage in terms of EU banks. Now the infrastructure is set up and they know how to proceed with further reforms. There is no SEPA without PSD2. That was Maja Mikic's comment, very, very interesting. Then we had the Romanian regulator who asked the fintech companies to create a national fintech association. That's also interesting, something to think about. I'm looking for my fintech folks around the room, that it came from the regulator. Very, very interesting example. Don't expect banks to be quick, but while you wait for them, take into consider everything, including the end users. That was George Zdravkovic from Protocol, and his very interesting comments. Banks and fintechs, open banking, are not competitors. They serve separate demographics with overlapping needs, and each sells a different product, or let's say complementing products. We have a lot to, we have to be careful with AI. And there's a lot of things said about AI today, and that it's not necessarily smarter or better than us in many things that it claims it does. It's not revolutionary in terms of predictive modeling, but textual video and generative capabilities do open up entirely new channel. That was Slavoljub's coming from Ike Bank. I think he left, but that was very, very interesting. For many companies, AI is simply an automation tool without looking at added value. That was Nicola from Native Teams. Fraud doesn't happen only on, the only place that fraud doesn't happen is islands populated by animals. That was Andrew Ward, very, very nice, from LexisNexis. Customers will expect to have AI solutions integrated by default. That was the team from Liquiditas. We have the cashless society, that was our panel, is not fully achievable just because there's emergencies, disasters, etc. In Serbia, tokens are not securities in most cases. That's important to think about. And the tokenized assets are really a lending mechanism, and they're not a proof of ownership. Things to keep in mind. Financial education, we talked about it. We started with it, we're ending with it. Thank you for bringing this to our attention, everyone. Regulations from our crypto panel, that Europe is killing innovation. That was Marco's comment. Serbia is becoming a crypto refuge from Micah. That was an interesting comment that I heard. Technology of any kind, including crypto, breaks down protectionism. That was David Veselinovic from Crypto 12. There's no such thing as impossible fraud. It's just a matter of their cost-benefit analysis. Luka Milinkovic from Symphony. And the last panel brought some interesting statistics and points that AI in investment is basically companies putting all of their eggs in a few baskets, that 20 companies were winning 80% of the funding. That's a sign that there's not really diversified investing in this field. The era of free hype money is over. Alex Chatterjee from C-Square Lab, and that we're basically reaching the place where the crowdfunding is going to become much, much more interesting for everyone involved, funds, pitchers, et cetera, et cetera. That's it in terms of what I have for notes. I would like to thank you for coming to this year's edition of Finticipate SEE. And good Lord's willing, I'll see you next year. And Jasna, I don't know if you want to say something. Last housekeeping point, please return the headsets to the crowd. And once more, thank you to Uroš and Nives for interpreting. Thank you so much.